Holding up okay. The only thing is that the breath has eased off a little bit from the top. So Eicher Motors is now around 3.25%. Shriram Transport, we're going to be chatting with the management as well shortly. That's down about 3% as well. Interglobe Aviation, 2 days of a massive run up, and now the stock is beginning to ease off. So about 2.25% there as well. Lower, BHEL too seeing some ease off, down 2%, and Bosch as well, along with Bajaj Finance. Not Bajaj Finance actually, I beg your pardon. And some of these other names are seeing a bit of a red tick play out for themselves. So just look out, it seems that the broader market as well, you're seeing some profit taking set in. But focus earnings, and let's welcome on board Shishir Joshipura, the CEO and MD at Praj Industries, joining in on the show right now. Shishir, hi, morning, good to have you on the show. There's been a broad-based decline across segments, which resulted in your overall revenue as well declining and losses this quarter as well. Walk us through the impact that you felt of the lockdown and the COVID pandemic on the earnings.
So this was a globally an unusual quarter, if I can say that, for everyone. As we know, the first 6 weeks were completely locked down. We were shut down on our operations. Our factories were not operational. Our R&D center was not operational for reasons of the national lockdown and the pandemic. Therefore, we started our gradual opening only towards middle of May, which was half the quarter already over. And even then, it has been a progressive unlocking, if I can use that word. And what you see is not actually a full quarter. So there is no point in trying to ascertain whether it was a 30%, 40% of the full quarter basis, because the results are not indicative of a full quarter operation.
Right. Will the slower translation of inquiries into orders given multiple challenges, and how much has that really impacted your operational performance, and when exactly can we actually see things improve?
Actually, we have had a very good first quarter on that perspective, because in the short time that we had when the unlocking started, but more important than that, we were working from home wherever we could. It was just that our production facilities obviously could not work in the first 6 weeks of the quarter, but we were all operational from home, and that enabled us to stay in touch with our customers, dialogue with them, help them progress their projects, and that has enabled us to actually improve our order booking compared to the previous comparable periods. And we have been and we have noticed that traction because of the demands in the market for pharma grade alcohol, for biosyrup based ethanol production. These have actually been very positively developing for us as we move through this quarter as well.
Okay. What about your segmental growth, order booking, the kind of growth outlook you foresee as well?
So if we look at our core business of bioenergy, very, very critical to note that as I speak with you at the end of June, the blending ratio is 5.05%. And that means that there is still a lot of, and at 5.05%, there is still a lot of gap between what was required versus what was fulfilled by ethanol producers. And that augurs well, because that actually shows that there is a lot of scope still for improving ethanol production capacities. I was also talking about the fact that we are witnessing increased traction from the biosyrup and syrup-based ethanol production in India because of the expected good sugarcane crop. We are now expecting that in the forthcoming season, there will be a push for higher production of ethanol, and freeing up the feedstocks that was done in the National Biofuel Policy is actually going to be very, very helpful. So we see several of our customers move to different feedstocks. In addition to these sugary feedstocks, we have also seen a very progressive step from the government in freeing up the starchy feedstocks, which is another very important arm for ethanol production. And the government decided to use surplus grains for production of ethanol, and these policies just been announced. So we expect very good traction. On the other hand, if you look at our collaboration with ARAI that we announced a few days ago, that collaboration will enable us to work on a project with ARAI to define different application areas for ethanol, including blending of ethanol for BS6 diesel engines. And as we know, the diesel consumption in India is several factors higher than petrol consumption. So overall demand for ethanol is likely to find a big boost on one hand. The second, as I was mentioning earlier, the pharma grade alcohol demand across the world as the pandemic unfolded has gone up several folds, and everyone is wanting to ensure that all their economies are not starved of pharma grade alcohol, and we are seeing very, very good traction from across the globe on production of pharma grade alcohol or conversion of plants to convert them to produce pharma grade alcohol. So we actually see very positive traction coming our way.
Okay, on the renewable chemical sector, tell us about the potential revenue opportunity there as well, what it brings to the table for the company, particularly after the MOU with the National Chem Lab.
So we launched under the initiative of BioPrism, an initiative that would enable us to develop technologies for renewable chemicals and materials. That's a step that we have just announced. And I think it's a little bit early to talk about any revenue streams out of this because there's a developmental cycle. And in due course, we will let you know.
Right. Shishir, are most of the plants now operational, and how badly really has the supply chain been impacted?
It's a mixed bag, right? There are customers who are experiencing difficulties because their sites are within containment zones or they have difficulty in accessing labor. Some of our customers have also asked us to even expedite because they want to start production of pharma grade alcohol very, very fast. So depending on where they are on the product cycle, there are different strokes for different customers. Even on our own supply chain, we have seen some of our suppliers very quickly ramp up. Some are still finding their feet. Even on our own operations from our 3 locations that we have seen one location ramp up to full scale very, very quickly. Other 2 are at about 70% and ramping up. So depending on where because this problem has its own nature of localizing itself while it is a global problem. I think we are experiencing different responses from our supply chain as well as our customers.
Sure. How is it that you see your order book shaping up then, and how much would you say it got impacted because of COVID, and how much can you really recover going forward?
So as I was mentioning, we have seen constructive development for our order book. It has been higher than any comparable period from the past time when things were normal. So in a very, very difficult quarter when we were trying to come to terms with how to work in this new environment, we have been able to post a very good growth in our order book, and we are seeing good traction on account of course, pharma grade alcohol inquiries. Even our businesses for high purity, that is supplying high purity water systems and other systems for process systems for pharmaceutical industries is seeing good traction. We have received a contract for the 3rd plant of the 2nd generation biorefinery that we are building from HPCL. So we see some very positive developments happening in the market, and that we see, and we expect that this traction will hold.
Okay. What's the outlook on growth and market share in the brewery segment and ethanol as well for the year? If you could share that with us.
I am sorry, I will not be in a position to put a number out there for the simple fact that things are still in uncertain territory. As I was mentioning to you, there are different strokes from different customers. Some customers want to expedite commissioning of the plant. Some are delaying. Some are not even able to take a decision. Some new projects are wanting to come up fast. Some are saying, no, we have to wait. So it's a bit of a mixed bag out there. So it will be hazardous for me to put a number and a guess out there. What we are beginning to see is definitely, if you were to ask me how do I compare the first 6 weeks to the last, let us say 10 weeks, in the last 10 weeks have obviously been more constructive in terms of business gradually building back.
Sure. What's then been the impact on your exports, and how do you actually see the export contribution, Shishir, going forward? I mean, have you seen a slowdown of orders when it comes to international geographies and markets like Southeast Asia as well as South America?
So again, the answer is a mixed bag. We have seen an increased traction from United States and Europe for very quickly on the pharma grade alcohol. There seems to be a big demand coming in. We are already executing our job for the largest pharma grade alcohol facility that we will set up for a customer in Wisconsin, United States. That order we got during this shutdown. And there are also several more inquiries that we are working on. On the other hand, South America has seen a very different response to the pandemic, and we have seen that the activities there are still to come back and pick back speed to come back towards normalcy. So mixed bag. So North America on a different speed and platform, South America on a different speed and platform. But we are now beginning to see one phenomena that we are seeing demand for pharma grade alcohol plants from across the world, not only restricted to a particular territory. A lot of countries are thinking in terms of being local producers of this very, very essential ingredient, and that's going to be even more essential as we move forward with our lives.
Okay, Shishir, good to have you on the show. Thanks as always for taking the time out and speaking with us today.